Hey, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you've watched this show before, you know what we do here. But if not, what we do here is we talk about stocks and their upcoming earnings. But not just that, but we talk about how to profit from those earnings announcements that everybody pays so much close attention to. So this is Monday, October 6th. We are in the final week of Q2 earnings. We have relatively quiet list this week as far as the number of stocks that are going to declare earnings. But this is the quiet before the storm, because next week we begin the Q3 earnings cycle. And but until then, we have a few headline names this week. But other than that, the action really begins next week and then the following weeks after that. So you're going to want to stick around today because I got a good trade for you from last week. You're going to want to see what those results for. I've got our list for this week and also a new trade for you this week. So buckle up. Let's get going. Okay, what we do here each and every week is we talk about stocks that have earnings. And one of our strategies is on what we call quiet stocks. We have a free webinar coming up in 2 weeks. It's going to be Wednesday, October 15th. At 8 p.m. Eastern Time, myself and my colleague Rob Roy are going to be talking about how to generate income from stocks. And specifically, one of my strategies is around earnings. Okay, so there are 3 basic strategies that we employ when we talk about trading earnings. One of those strategies, one of those 3, is on what we call quiet stocks. That is on the right-hand side of this week's list. Okay, so what you're looking at here are stocks that are going to have earning companies that we are focused on. Okay, the roughly 12 stocks this week that we're zeroed in on. So some of these are relatively quiet, meaning they will move single digits through earnings. That is their average, and that is their estimated move provided by the option market makers. The other side of the list, on the left-hand side here, we have our breakout stocks. Now, these are more speculative types of opportunities. We use strategies over there called straddles and strangles, and we expect double-digit moves for these stocks. And I talk about each and every one of these types of strategies as we go through our show. So let's get right at it. Let's begin on the quiet side of the ledger. These stocks we usually analyze and do income types of trades called iron condors. Okay. Now, let me give you a quick example of a trade before we get to our list. Okay. This is Pfizer. Pfizer does not have earnings this week. They don't have earnings until November, but this is an example of a quiet stock. You can see the scaling on the right-hand side there. It's in $2.50 increments, and each candle represents 1 day, and they're all kind of scrunched up here, but this stock moves very little throughout the day, and I have the earnings highlighted with the ellipse, and you can see that even through the earnings announcement, the stock does not move very much at all. This type of stock is ideal for an income generating strategy. We like to use iron condors with that opportunity. Okay, so let's go back to our list for this week, and you'll see that we do have a couple of big names there, including Constellation Brands, McCormick's, and PepsiCo. Let's go to my chart, and we're going to start analyzing some of these. Constellation Brands has their earnings announcement tonight. Okay, that's Monday, October 6th, after market close. The average move here is about 5%. And that's actually what market makers are pricing in right now, is a move of about 5% for the stock. Now, that could be plus or minus a little bit. And every now and then a stock may make even a bigger move depending on what sector it is. Okay, Constellation Brands is in the beverage area, and there is quite a bit of talk right now about how these guys, like Constellation Brands, especially Diageo, are going to be struggling just because of changes in consumer behavior. When it comes to alcohol, fewer amounts of alcohol are being consumed, and that's really impacting those companies. So Constellation Brands, take a look at what they offer. And if there's a high concentration of alcohol, then they may have some poor results to announce. If they don't, then there might be a plus side to that opportunity. But nonetheless, the expected move right here is about 5% is all. Okay. So again, really ideal, since this is a $139 stock, really good for an iron condor right now. We've been analyzing that, and we like to do these trades for our customers in a publication we call Delta Neutral Income. So we'll be talking about that in 2 weeks during our webinar that I just talked about. But this is an example of a quiet stock. Let me show you another one here. This is McCormick. All right. Now, the stock history, as you can see here, it looks like it's pretty volatile. It's sold off quite a bit. But remember, look at our scaling here. It's in $2.50 increments. I can compress that down. If we go to $5 increments here, you can see that it flattens out a little bit. It's not as volatile as you might really think. But McCormick, and again, yes, the spice people, all right, they will declare on Tuesday, okay? So tomorrow night, actually tomorrow morning, October 7th, before market open, McCormick's will be declaring. And here the average expected move is just 5% for itself, okay? Also, so, and again, Constellation Brands, 5% move, McCormick's 5% move. This is pretty typical of these quiet stocks. Given that this is almost a $70 stock, pretty decent opportunity here for a strategy that will benefit from more of a sideways movement in the stock. And that's what's being priced in right now, is just that 5% move. Now, the only other quiet stock that I'm focused on this week is PepsiCo. All right. Now, PepsiCo has shown a little bit of volatility in its past, but believe it or not, the expected move here is about 5%. That's what the option market makers are pricing in. That kind of matches its average. All right. Now, this is a $140 stock. Opportunities for doing an income strategy like an iron condor is very high if the pricing works out. And what you want to do is make sure you get your break evens well above that 5% mark. So well beyond that. I like closer to 10% just to be on the safe side, but it's got to be worth the effort. And if your maximum risk divided by the maximum return divided by the maximum risk of the trade is not high enough, then it's not really worth doing. And I like a certain number. And for our subscribers, I do cover that quite a bit each and every week of where I like to see that. And we have quite a good track record doing trades on these quiet stocks in and around earnings. All right. So really, Constellation Brands, McCormick, and PepsiCo, those are really on our list this week for quiet stocks. And we will be focused on them through the week. All right. Now, on the other side of the ledger, we have our breakout stocks. And again, these are the ones that are really the potential movers. All right. And you can see our list here, but let me show you a quick example of what a breakout stock looks like. Okay. This is Akamai. All right. I know there's a couple of different ways to pronounce that, but from this trader's perspective, I say Akamai. All right. So this is a classic volatile stock. You can see how much this stock moves around on that chart. I have the earnings announcements indicated with the ellipse here. This is a double-digit mover around earnings. It does it consistently. And so for this, we use straddles and strangles. Yes, implied volatility rises when we go into earnings and making straddles and strangles more expensive. But if the pricing is there, we can get actually we can create an edge that is in our favor That's where sometimes the option market makers haven't priced in the full potential move of this stock, and that leads to our advantage. Okay. And this is what we call a breakout stock. So let's go back to our list real quick. And you can see that we have a few more names here beginning today and then later in the week. And there's some pretty decent names here. One name that's not listed that we'll talk about is Levi. But let's get to this list. First off, after market close today is AEHR Test Systems. All right. Now, this stock is a classic mover. Right now, it's priced at $31. This stock has an estimated move and an average move in the mid-20s. All right. 27% is the average move here. And believe it or not, I priced this out this morning, and the option market makers are anticipating about a 28, 29% move. Now, that gives us doesn't really give us an edge, because if the average move is 27 and the option market makers are pricing it for a 29, 28 or 29% move, then the likelihood of us making a profit in the trade is greatly reduced. Okay. We want just the opposite. We want the option market makers to price in maybe an 11 or 12% move on a stock that has an average of 27. And that does happen. Okay. Believe it or not, that does happen where we see that. And that's where we get the edge in looking at these breakout stocks. All right. Now, another stock that we are on our watch list, really all these go to Thursday. So we jump over from today to Thursday. Okay. And right now, Delta Airlines is going to have its earnings announcement on Thursday morning. Okay. So Thursday, October 9th, before market open, the average move here on Delta is about 13%. So this is a mover, and it could possibly be a big mover because there's all sorts of things that could affect the outlook for Delta. Obviously, consumer ticketing and traffic is their key thing, but also fuel costs and the impact of, believe it or not, the impact of tariffs on how the consumer feels about spending money on travel could definitely impact a stock like Delta. So keep an eye on Delta on Thursday before market open. The average move here is double digits. It's about 13%. Okay. Now, another historical mover is Helen of Troy. All right. And you can see here on Helen of Troy, the last earnings announcement here, look at that big drop from $31, roughly $31 down to it opened down at $21. So a $10 move on a $30 stock is a big percentage. Okay. The stock did rally during the day and closed at $23. Okay. But still, that's a big move for a $30 stock. And this is pretty typical. All right. The stock then consolidates and bounces around. And now we're building up for their earnings announcement, which again is on Thursday. That is October 9th before market open. All right. The average move here is 20%. That's the average move around earnings. So again, you're looking at around $4 to $5 move on a stock that right now is trading at $26. So you could easily see that on Helen of Troy. So definitely one that we like to keep our eye on. Okay, another breakout stock is, believe it or not, is Levi. Okay, Levi's is going to declare on Thursday after market close. All right, the average move here is 12%. Now, again, tariffs, consumer, all these things could impact a manufacturer like Levi Strauss, and that is why that would be a good one to watch for Thursday. And you can see the last earnings announcement here. The stock opened up, closed the day before at $19.73, and then after earnings opened up at $21.95. That is a nice little double-digit gap there on a percentage basis, and we're expecting to see that again with the stock having a nice little rally here and now consolidating before that earnings announcement. We like to see that on a stock that is making nice advances or declines and then all of a sudden consolidates right before the earnings announcement. And when it has a historic double-digit move, that sometimes is a key to the next big potential move. And it's all about, listen to this, it's all about what the CEO's outlook is. Yes, the stock will move around around the earnings, either hit or miss. All right, if they hit their estimates or they miss their estimates or their revenues, okay, but nothing moves the stock more than a CEO's outlook and how things are going to look for the fourth quarter and beyond. Okay, that could really move the stock. All right, then we got two more here to talk about. We have Apogee Enterprises here. Again, another big mover. 22% is the average move here. Option market makers are already pricing in a high teens double-digit move for this stock, but it is, look at this, it is consolidating a bit. This is in $2.50 increments. Let me change this to $5, okay? And you can see here that we're expecting a big move here. This stock will declare after-market close on Thursday. The average move here is around 22%. So for a $45 stock, again, you're looking at probably an $8 to $10 to $12 move for this stock, and that is very doable for a stock like Apogee. All right, and we're going to close out our list here. Okay, not an expensive stock at all. It's only currently trading at $28. Okay, but Applied Digital, all right, is scheduled to release their earnings results on Thursday, October 9th, after market close. So a big day for Thursday, before market open and after market close. All right, this stock has an average of 23% around earnings. So looking at a straddle or strangle, yes, you're going to pay up because implied volatility is rushing into these options right now, making options more expensive. However, this big move, if I could get a straddle or strangle where it's expecting maybe where the pricing has my break evens around 12 or 13% away, I'd be all over that because the average move here is 23%. That's giving me a little bit of an edge in that potential trade, and I would take that any day of the week. And the stock is actually up almost $6 today. My goodness. Big move today for Applied Digital ahead of their earnings announcement. Okay, so let's take a look at our list once again. And you can see that we are relatively quiet this week. Next week, we still are quiet. However, beginning on Tuesday, the 16th, the banks start declaring earnings. And, we will have a big week next week. So I'll talk more about that in a moment. But you can see here that we have just a handful of stocks, both on the volatile side, which is the left-hand side, and the quiet side, which is on the right-hand side. And so let's take a look at how our trades went, because last week we took a trade from the volatile side of the ledger last week. All right. And that was the trade that we put out, and that was on United Natural Foods. Okay. UNFI. This was the setup. We were looking at a strangle, which is buying a call at one strike price and a put at a different strike price. Okay. We did the strangle. We were looking at the stock to have a big move after earnings. So let's see how we did in the trade. Okay. This is what we call a home run trade. Now, the reason why this is a home run trade is because just in a matter of days, we make a triple-digit return on our risk, on the amount of money that we put into the trade. Okay, we tripled our money in the trade, or a triple. Over 100%, sorry, not tripled, not like 3 times, okay, but a triple digit. So 100% plus is usually a home run trade just when we're in the trade for a few days. And you can see here, the stock gapped up on the earnings announcement. It was profitable right then, but then we stuck with it to see if there was any follow through. There was, and at the end of the week, we closed this out for a profit of $548. Okay, $548. Our debit was only 400 and change. Okay, was our debit. So that was a 174% return on risk in just 4 days. That is the potential of these breakout stocks. All right, they're very exciting. They're very fun to trade. Yes, sometimes they don't go our way when the stock just doesn't move as much. But United Natural Foods definitely was the mover of last week, and we were in it with our trade. So what do I have for you this week? Well, we're going to stay on that side of the ledger, on that breakout side of the ledger. And for this week, I'm looking at Delta Airlines once again. Right now, the pricing is coming in at around a 7% move for the stock when the average is 12%. That is the edge that I'm looking for. This strategy, if you're looking at, look at the risk graph on the right-hand side, you can see the black line forms a V. All right, this indicates that it's a straddle. Okay, where the call and the put are the same strike price with the same expiration. The debit here is going to be just a hair under $500. So it's appropriate for smaller accounts, say a $10,000 trading account or anything above that. It's very appropriate for. So a straddle is what we are looking for on Delta Airlines. Now remember, they declare on Thursday morning, Thursday, October 9th, before market open. We will see results from Delta, and we are expecting a double-digit move to keep with its average for that earnings announcement. All right. So that is our trade for this week. We've had a great run here of success over the past couple of months, and we're hoping that Delta Airlines brings another one in for us. All right. Now, once again, I want to let you know about our upcoming webinar on October 15th. That's a Wednesday night at 8 p.m. Eastern Time. The link is right here on your screen at ewotrader.com/gift. Rob Roy and myself will be talking about generating income from potential companies, not just company earnings, but stocks in general. And we're going to be talking about several different strategies that we use to generate that income, and we're very consistent with it. So please join us. Register right now. It's a free event, and we will see you on that Wednesday night. But I will see you right back here next Monday as we get into the start of Q3 earnings next week. You don't want to miss it. You want to be right here because we will be talking the banks. Banks will be featured next week, and lots of potential news will be coming from that group. Let me tell you, as we head into the next cycle of earnings. Okay, that's our show for today. Hope you enjoyed it. Everyone, have a great trading week, and I will see you next Monday right here. Take care.